Hi, everybody. Welcome to, we don't have to, okay, there's like, we'll dispense with the introductions because we have the screen up here, and really, everybody here really needs no introductions, except me.
The genius.
Thanks so much for coming over. We're continuing the Financial Security Forum, which is a new addition to Medicarians, bringing in some other voices, trying to round out the toolbox, bring more tools to you as agents, advisors working with your clients. And we have a panel of experts here continuing on the discussion that is based off of the paper we released here at the meeting, Financial Security 2030. It's available on the website. You can get a copy of it, download, and take a look at what some of the major impacts demographically, financially, politically, that are going to impact this population as it continues to age. Baby boomers turning 65, the last of them turned 65 in 2030, and the first Gen Xers start turning 65 in 2030. So for my fellow Gen Xers out there, ouch, it's our turn, here we go. Time to go through the door. So I'm going to start by going down the line. We have questions to go over the next half hour, and have a very, very thoughtful discussion about where are we going over these next 5 years. So Todd, starting with you, your distribution, a prominent IMO, working with agents, advisors, and really have your finger on the pulse of the consumer and the agent. You sort of have two clients. Your agents need to be happy, and then the consumer, the clients need to be happy. So, what do you see ways that clients are prioritizing and seeking information on products to help them with their financial security, their planning now and into the future?
I think when you look at the access to financial planning products, and I think a bigger question has to be answered is the idea of what are agents missing in regards to building a financial security for their clients, just being a Medicare straight agent. And if your answer to questions are I don't do that, or that's not me, I think those days have to be over. I think your clients need a little more education and a little more lift from you and support. And even if it's just guiding them to the right other person that you've picked that you think is an expert in that area, but you need to have some tactical information in the areas that you're going to be asked. There's about a half a dozen products they're buying, and you need to know a little bit about that, because there are a lot of other agents that do know some of the answers that they're looking for. Mm-hmm. And they probably also sell Medicare too.
So, Pete, you're with Coventry, the biggest life settlement company in the world, and you're here at this meeting for the first time. And I was saying earlier in the plenary stage, the growth and diversity of services that are showing up at this meeting. I remember this meeting 4 or 5 years ago, and it was Medicare only. And now you're seeing a diversity coming, and it's great to see that happening. And with all of the consumers that you talk to, and advisors for that matter, you talk to thousands a month at Coventry, what does that tell you about their level of financial literacy, preparedness, understanding of things, call it alternative funding solutions, like a life settlement, using their life insurance policy as a way to maybe pay for health, long-term care costs, supplement their retirement? What's your experience working with the consumer, and agents for that matter, in terms of that level of understanding?
Thanks, Chris. Really appreciate you putting this panel together, and appreciate everyone here giving us the time. Obviously, Coventry is probably a newer name for many of you. As Chris mentioned, we're the largest institutional purchaser in the life settlement market. I'm sure some people are thinking, what is a life settlement? A life settlement is essentially the sale of an underperforming, unneeded, or unaffordable life insurance policy for a cash payment. So our role really is to come in when seniors have had changes in their overall life insurance planning needs. Over the last 21 years, I've worked with agents across the country and consumers specifically regarding their life insurance. And what I can tell you is
Put them
All
up.
right, I hear you. So, when working with these agents and consumers, okay, these are people that, number one, have life insurance. So it's a pool of people that bought life insurance, but the reality is, on the consumer side, their financial literacy of just about their life insurance is very low. And one of the main reasons behind that is life insurance is generally sold and not serviced. There are millions of policy owners out there that are orphan policy owners. There was an agent present at day one, but years down the line, there's not an agent there. And the reality is it's not a set it and forget it type product. Okay, there are thousands of reasons why people buy life insurance and thousands of reasons why that need changes over time. And they need assistance to kind of review these products, review the features, understand what's going on, how it's performing. And they're really not getting that education on doing it. And when you take the fact that 85% of universal life insurance policies never pay a death claim, right? A permanent form of life insurance, and 85% of them, they need an agent there to help them walk through that process. And that's one of the main reasons we see so many more seniors thinking about making changes to their life insurance policies and looking at life settlements, right? A lot of it has to do with policy performance, given that most permanent life insurance, the performance is tied to interest rates, and we've been in a historical low interest rate environment for the last 20 years. A lot of it has to do with unaddressed longevity risk, right? Policies were taken out for wealth transfer purposes, but with rising healthcare costs and longevity, right? Now the focus is more on income for today, so they're not a burden on the next generation. So what we really preach is that if more agents get involved and educate their consumers, it'll raise the financial literacy and help these consumers really make informed decisions of what they should be doing with their insurance and really help them set themselves up for a better retirement.
Pete, thank you. Amanda, as the CEO of one of the leading InsureTech firms, Performex, I'm sure you, and we've actually spent time together on this. We've been on the stage together talking about AI. I don't know if any of you have heard of AI.
I hear it's enhanced.
Yeah. Todd and I had a running joke a couple of years ago. There were people that had nothing to do with technology, and they would just slap AI up on their sign and say, "Now with AI." Anyway, but for the legitimate advent of AI, we're seeing it. It's very powerful, but still, you can't remove the human factor from this business. So, how do you see the balance coming together, Amanda, of AI as a tool that is going to propel the productivity, the success of everybody in this room, as opposed to replacing them?
That's a great question, Chris. Thank you. So one of the studies that I saw recently was mentioning that around 30% of advisors are set to retire in the next decade. But the industry is only adding about 0.3% new agents and advisors every year. So even if we quadrupled the number of people who are getting in the industry, there's going to be a huge gap of consumers who need someone helping them with their financial plan. That means the technology, whether it be AI enhanced or any other kind, is going to be imperative to make sure that this industry is meeting the needs of the consumers that are out there. So it's not about the replacing the human element. I think when people talk about this type of plan, they're talking about deeply personal things. How do they want to, what is their lifestyle in retirement? Or how do they want their family to be protected? Those kinds of conversations I don't see, even on the technology side, being things that people will want to replace that human connection with AI. Now, there might be some uncomfortable conversations when you have to do like medical surveys or things like that, that someone says, oh, I'd rather talk to a robot than to my financial planner. But by and large, these people want someone they can trust, that they feel like they're getting real advice from. There are people who often say, when there was an event where they needed quick action, their advisor is often one of the first people that they call. So I think that's always going to be true. But to meet that consumer gap, this industry is going to have to learn how to adopt technology into their business so that they can make sure to scale and meet those consumer needs. One additional point that I'll make too, it does feel like there's a trend towards a lot of bespoke products that are out there, whether it be proprietary products with carriers and distributors, or for high net worth folks, they may be doing private placement type products. So now you have a reduced workforce on the advisor and agent side, you're gonna have a bigger client need, and you're having more specific bespoke products that you have to take care of. That's where technology is really gonna come in.
Yeah, absolutely. And Todd, For agents, advisors, there's utilizing technology. There's being aware of other opportunities in the market. But when it comes to opportunities, what are some of the opportunities that you think agents are missing? And we can talk about the things that are available, and then there's the things that people are just missing out on. And how do you view that from the distribution perspective? What are the opportunities that they're maybe missing out on?
Well, I think the answer is really a lot of what Amanda talked about is just trying to get better in the way you actually format your agency and whatnot. And the solutions that we've designed is a multi-channel, omni-channel marketing program that's touching your clients on a weekly, monthly basis. There's just soft journeys and emails that actually starts to elicit these other products that you have chosen either not to become an expert in or whatever, but they're buying from somebody. And if you don't monetize that or actually figure out a way to provide a solution, and it may just be talk to Chris, my guy, when it comes to these annuities, because you said, I'm looking for a CD alternative, or I didn't know I had this answer. So we believe, and we've baited this out, that every client you have is probably about $150 a year in recurring revenue in products sold, even in split basis. So if you're looking at 500 clients, that's $75,000 a year just answering the questions that they have on a daily, weekly, monthly basis of products like final expense, products like that might even be life settlements, because very few people are aware of them. If it wasn't for companies like Coventry putting a soft and a nice light on it, we wouldn't have the opportunities to help our clients, our agents' clients, solve some of the solutions when they have options and they don't really know about. But what we decided is that we know all these things are being sold in a book of business. And if I'm very, very good at Medicare, you should stay in your lane. I honest to God believe that it is a very quickly changing, fast, regulated lane. But give yourself the option to monetize the other income streams that you have. We call them kind of pillars. And monetize that by finding some type of a marketing strategy that goes along with what you do well and do very well. So I think the tech should not be scary. I think it should be implemented in your marketing plan. We've built this out and have started to beta, and we're working, and we think it's probably about a $40,000 a year marketing plan that's bringing in all aspects of the financial planning and as much tech as we can and some big data. And we think it's a game changer. Not saying that it's only us. There's other ways to do it, but just understand that there's a way to monetize the things that your people go through on their life process or journey, and that you can just provide them information and point them in the right direction too. It doesn't have to be I have to learn these products inside and out, because it's impossible.
So leaning on experts, having partnerships, adding tools to your toolbox that doesn't necessarily mean you have to exert a big spend. Maybe you don't even have to get involved in new types of licensing. I mean, there's a lot of different ways to skin the cat.
Yeah, we charge $100 a month right now for the product. So.
Right. Okay, so right there, I mean, that's a very low barrier to entry. $100 a month to get something that I can't even imagine what was invested in it to put it together. So along those lines, adding things in kind of expanding your reach and your depth of expertise. Not that you have to be an expert, but to have a team of experts you can rely on, you can turn to. Peter, using a thing like life settlements. I see obviously TV commercials about life settlements all the time. The tagline, you could be sitting on a gold mine if you don't need your life insurance policy anymore. But you do a lot of work with agents and helping to bring that option into their practice. Do you see agents grasping that, understanding that? What are the barriers to entry? What are the opportunities for agents to embrace this as another example of a tool that is designed to help people as they're aging, as their health is declining, which is the exact people that everybody here is talking to?
Sure. So we think we're trying to get agents to really go out there and educate their clients and have them understand that life insurance is an asset. right? It's a different product than most, because generally the person who's paying the premium for it or gifting the money to the trust never sees any of the benefit of it, right? It generally gets passed on to the beneficiaries. But helping people recognize this is an asset and it needs to be reviewed, right? People sit down on a yearly basis with their financial advisor, their wealth manager. They go over their portfolio. They ask questions. They talk about asset allocation. How much income can you take out of the portfolio? Go over performance. But the life insurance policy is hardly ever involved in that conversation. You know, with technology today, the internet, people know what their assets are worth, right? You go on Zillow, you have an idea what your house is worth, Kelley Blue Book for your car. I've seen people have resources for fine art, jewelry, wine collections, okay? But no one ever really thinks that there's a value to their life insurance outside of a permanent policy, what that cash surrender value, right? Agents and consumers hardly ever think that a convertible term policy might have some value to it. And the reality is that's 20% of our market. Our term policies that people bought with the old strategy, buy term and invest the difference, knowing they were going to get rid of that policy. And this is actually something that has value that can be utilized. So what we really preach is incorporating life insurance policies into the review process. Right? I've heard a number of speakers talk today. It's about asking the questions. What was the original purpose of the life insurance? What are the planning goals today? How does this policy fit in with those goals? Okay? How is the policy performing? And then going back and making an informed decision. Sometimes the policy is still a very valuable piece of the financial plan, and we'll be the first ones to say they should keep the policy, right? But there's sometimes a lot of performance issues. They need to change a beneficiary, and it's a great way to update the client on the policy, talk through things. But in many other situations, that need for insurance has changed, and the review process brings up a great opportunity to leverage the existing value of this policy. Okay, why surrender something for $20,000 if you can turn it into $100,000 and use it as a reallocation tool to help better accomplish their planning goals? We see, 2 out of 3 cases we work on, there's a new transaction that's happening, right? It's often annuities, it's often hybrid long-term care, a lot of new assets under management to help fund for their retirement going forward. So we find is just treating the policy as an asset, included in the review, and it creates tremendous opportunities and really helps that consumer understand the process a lot better and really understand what they have and readjust their overall portfolio.
And that makes great sense. That just opens up the door for more opportunities, more discussions, more ways to help people, and more ways to bring revenue into your business. Amanda, with the growth of technology and the just accelerating rate of AI, I mean, I feel like 2 years ago, I wasn't even really hearing about it, reading about it. Maybe now it's been a little bit longer, but it's becoming so pervasive, and it appears to have so much opportunity. Certainly has a lot of opportunity for my kids in school to use. I think they're getting real good use out of it. But what about the blind spots? What are we missing about it? What are we missing about it that are challenges, but also opportunities?
That's a great question, and I think, Chris, it's almost like you put us up here because you knew that we would sort of sing the same tune. It's really working together here, because Todd and Peter both kind of touched on where we see that happen in the industry. So our platform deals with the post-sale information. So as Peter was talking about policy reviews, someone might use our platform for that. Someone just wants to get their arms around what their book of business looks like. I was shocked when I first started working at this company how many of our clients were just surprised by what their total face amount in their block of business was, because they didn't have that visibility post-sale. Someone on the main stage even mentioned this. These products are meant to stay around for 10, 20 years. So how do you manage it over the life cycle? But at the same time, advisors are typically talking about the financial plan, the investments, all of these other assets, and not bringing in, they don't have the visibility into those other truly assets that their clients may have. So when you think about applying technology, or you think about using big data, AI, all of these things, in technology we often say junk in, junk out with slightly more colorful language, but that doesn't necessarily mean incorrect data. It can also mean data gaps. So if you're using a financial portfolio that doesn't include all of the assets that that client has, you may get incomplete, or at worst inaccurate, recommendations from those technology tools that you're using. So we really, really try to advocate for folks to bring that information not just get visibility, log into another portal, but truly bring it into the platforms where you're looking at all of those other financial assets so you can get the big picture. And that's when you can really take hold of technology and AI, because now suddenly you can be talking about, oh, you have this life insurance policy with a cash value. If there's a market downturn and you need a liquidity event, that's an asset that we can leverage. Or you can talk about how you have long-term care, and that's going to change how you're planning for the expenses for healthcare as your client ages. So if you don't have that information right next to where you're talking about all of their other assets, the recommendations aren't going to necessarily reflect what they truly need or what they truly have. And so AI technology, we often talk about that scaling your business, helping you grow in a sustainable way. The opposite can be true too. If you're not getting that full picture, you can scale the gaps that you have in the way that you're protecting your clients.
Yeah, Amanda, one of the things that I've been really researching, I kind of geek out on it, is that there are firms and companies out there that will come in, analyze the data, and even if you haven't sold the annuities or the life insurance in the book, they can actually look and find a switchers report that they can build with the socio and information and all the big data, and they can say these 14 clients will probably look at an annuity purchase this year. In your book, out of just data, and they're incredibly accurate on those numbers. And so it's not going to be something you should be scared of, it's something you should embrace.
You know, a big theme in the research that we did for creating the Financial Security 2030 paper, which is available here, was a holistic approach to financial security planning, retirement planning. And I want to just kind of go down the line with each of you asking, what is your thought on, your perception on the idea of holistic planning versus an agent sells a product, they're selling that product, and that's what they do, or expanding their ability to bring more to the table, to a holistic approach to their clients? Todd?
I kind of keep saying the same stuff, but I guess I'd look at.
But it always sounds so good, so just keep doing it.
It's just Ray Charles' low voice or whatever. Anyhow, and I might even be able to tie in a couple of the questions here.
We'll grab those right after we go down the line.
I would say answer that two ways: an offense or a defensive posture, and being holistic. The idea of knowing your lane and staying in your lane, I think, is amazing. A lot of people have made wonderful careers of that, and they're trying to scale their businesses as fast as they can, bringing on new clients and whatnot, when they have kind of a basis of revenue that's already sitting there with current clients. And I think the big answer to that question is if you're scaling to someday exit, which I believe everybody is trying to do, or slow down, if you can't monetize what you're sending to, maybe you're partnered with a certified financial planner, and you send him some business, he gives you a split, and then he's sending you all of your Medicare business because it's a great relationship. They don't want to know what you know, but they're not worried about you coming in and swooping and grabbing their assets because you're in your lane. But I think it's really important that you take a look at what your book really has and has an opportunity to make. And if you choose not to do it, just know that you're tactfully allowing the fox in the hen house. So why not monetize that? Secure the borders, or I've heard that line here lately.
Build the wall.
Build the wall. Yes, it'll be wonderful. But really, just kind of build that security fence on your business, and then build a team of people that you rely on that'll work with you and hopefully send you some leads and referrals.
And Amanda, how does technology help to empower that holistic approach?
Yeah, I would say to kind of flip the question, the client is going to require a holistic approach. Whether or not an individual has that holistic knowledge, these products can be very complicated. And so it makes sense that folks may have one area where they feel very solid in their knowledge and another area that feels a little bit more fuzzy. And that's where technology can help, because if you have the tools that can help alert you to the time where it seems like a client conversation might be a good idea, and you have the network of individuals that you know can support you depending on what that event is, that's when you can really take off and scale a lot of those opportunities that you may have. So for example, if you leverage technology where you can say, okay, I know my client bought this term policy, and in a year it's going to go into, it's going to end its level term period, which means the premium's going to skyrocket. You can leverage technology to say, okay, let me know when I come up on that event with my block of business. Get that alert so you don't have to be logging in proactively, paying attention to every single line item and date and dollar amount. You use the technology to be smart for you. And then when you get those notifications, that's when you engage with your network and the folks that can help you take care of your clients and what they need.
And then Pete, from,
You got to clap. I got to step up my answer game.
boy, yeah, oh, man. Well, Amanda's winning this session. Pete, what about the holistic perspective from the side of bringing in, an alternative solution like life
Sure.
settlements?
So I think I'm going to kind of echo a lot of what Todd said. It's step one, it's being that you're an expert in your specific field, right? But at the same time, you need to have broaden your horizons, learn different aspects, because clients, it's, example, use life insurance. The day of the single guy who just sells life insurance, does no other business, unfortunately, that's really a dying breed, okay? You have to learn about the annuities, long-term care. Clients need other solutions. Doesn't mean you have to, you're not an expert in it. You need to have a basic knowledge and have great partners that can help you and work through that process with you, right? You need to be able to identify when a client has a gap in coverage or they have a hole in their financial plan, and then really turn back to your team, your referral sources, to kind of work on those together. And that's over the last 20 years where we've really seen how agents having success. Part of it also is, right, what we do in the settlement market, it's a newer market, as Chris was saying, okay? So think about the target for us is somebody who has a long-standing book of life insurance. And the key is, you're not trying to pitch a product. You're trying to solve a need. And knowing when that client, when you learn more about your clients, whether it be through using data or asking questions and fact finders, when you know more about that client, that's when you can identify these opportunities. People don't sell their life insurance because their agent pitched them that you're going to get a lot of money for this. That's not how it should be used. They sell it because they've identified that they've had a change in their life insurance needs, and they can utilize this to solve a different problem. So I think it's all about bringing others in to help you grow your practice and introduce other areas to market to your client base.
Yep. So we have a few more minutes, and we've got some questions that have been offered by our audience. I'm going to start with the first one that actually is interesting because I think you'd each have a little bit different perspective on it. Each can take a bite or not, but I'll start with this one. Are life insurance and annuity reviews a good way to start for a Medicare agent? And the definition of a good way to start could have different meanings, but Todd?
Yeah, I think it's a fantastic start, but you got to be ready when they talk into that review and they ask, what do you mean by, or what does that mean, or how are you asking this question? Because you need to have a little bit of an education base. You need to have a little bit of a backup there, but reviews are fantastic ways to start to elicit the idea of, I need to give this client some more information in regards to life insurance or annuities or whatever it is. And they are uncovered in reviews, and some are really simple fact finder reviews. They're available everywhere. I would just say, if you're going to ask some questions about some products, that you get a level of expertise up. So, God forbid they say, hey, I want one of those. And you gotta go, shit, now I gotta write it. So. Hey, I gotta clap. Okay, we're tied. Yeah. More people clap, but just the event of the clap is what I think we're working on.
I love that. Well, I'm usually a yes and kind of person, but I'm about to do a yes but. One thing we see on the technology side with policy reviews is carriers make it so hard for you to get the information on an annual basis to do those reviews. And that's where technology can help in a lot of places, especially if you have clients that may have one or two products at different carriers. It can be extremely time consuming to just gather the documentation, get it into a nice format, do the plan that you have with the folks that have that expertise based on what your clients need. And so I do think that they are a fantastic way to protect your client and learn about how to speak about these things, but it's imperative to leverage technology if you're doing policy reviews, because the industry does not make doing that easy today.
So I think, one, we think life insurance policy reviews, annuity reviews are critical to policy owners, helping them. But I would say if you're first getting in the business and you don't have a lot of background in life and annuities, it makes it a little harder to go in and review someone's coverage. So I think that's where you need to have that referral source to help bring in so they can assist you. One, it's helping your client out. Two, you're learning through that process as well. But at the same time, too, that referral source hopefully is an opportunity that they can bring you into their clients, and you could really help their clients with your area of expertise.
Yeah, I'd agree wholeheartedly there. There's a few questions on there regarding how do I learn and what do I go into. There's NAIFA programs. You can go online. We do agent boot camps that are life and annuity specific, helping to figure out if you want to sell a hybrid life insurance policy with a long-term care rider or without. How do those riders look like LTC, or how they look like, how they're treated in the policy and what triggers send them off. But it's not a daunting task to get up to speed, to at least be at a mid-level where you can have the conversations and look in the reviews. But yeah, there's a lot, and if you need help, you all have wonderful IMOs that are out in your areas. They want you to learn how to sell annuities. They want you to learn how to life, and if they're not answering your questions right, there's a fat bald guy that would be perfectly happy, but this is not a commercial. I'm just saying that they are built to help and support you to do those things.
Yeah, I'd love to add on that, because we find that with the folks who use our technology,
Nobody
they leverage. One tally less. No, the folks that are even leveraging our technology, they're doing it to support the advisor. So we work with distribution partners, large broker dealers, wirehouses, even advisors themselves, agents and advisors themselves. But all of them are looking at, how do I get the information so when I'm talking with my advisor, my client, I'm helping them have the right conversation. So there are folks out there on the distribution side who want to be the ones that help to get you up to speed. And if your distribution partner doesn't want to do that, I would start looking for someone who does.
I think we've seen a trend where IMOs have invested tremendous amount of capital. Even though they're a wholesaler organization, they invested all this capital to go out and do point of sale work and work with you to educate your clients and develop these opportunities. So I think everybody's recognized out in the field, whether you're considered a wholesaler or on the retail side, there are wholesalers that are going to come out there and assist you through this process.
Another interesting question here. Do you think there's enough appreciation to form partnerships with Medicare-centric operations to bring that expertise, to their expertise to the table, matched with the other side?
Seems to be my
I think
field.
that's a huge
I think that's me. Absolutely. As a matter of fact, there are so many avenues to have partnerships and become the expert for them, because they're worried about their tranches of income. Also, you have P&C shops, you have group shops, you have CFP firms, you have RIA guys that don't want to sell a product if their life depended on it, and you may have a relationship that garners some of this other products that they choose not to sell. So building yourself up as an expert and knowing your lane that you're very good in really can branch out to be a very nice marketing. Spend 2 days a month knocking on doors and telling them what you do. And I think it's a wonderful way to get into this and be able to then maybe send a client or two back. The only problem about the client or two back is if you work with too many of them, stop telling them you're going to send them referrals, because if they don't get a couple, and they'll be expecting it. So stay in your lane, say, this is all I do. Yes, I work with a lot of CFP financial planners in this area, but this is all I do. Is I will always do the best job I can.
So form smart partnerships and then be a smart partner. So a final question that's come in as we wrap up is, where can agents get one of those sweet bow ties? The answer is, come see me at booth 627 and we'll talk about it. And if anybody wants to learn how to tie one, I'll show you how to tie one. So listen, everybody, thank you so much for being at this part of our Financial Security Forum session. We've got one more back-to-back. We're going to be right here in this room. We've got a fresh set of panelists drilling down into the Financial Security 2030 equation from some other unique perspectives. We're going to be talking about the long-term care aging in place side, more distribution. We're also going to be talking about succession planning and how to build your business and create a valuable legacy as part of everything that we're covering today. And thank you so much for being in this session today. We encourage you to stick around for part 2.